And of course, let's begin with our top story of the day. The Reserve Bank of India this evening releasing new banking license guidelines. And a key line in the RBI release was that it did not exclude any company in any specific sector to be eligible for applying for license. It is set the 1st of July as the deadline for new bank licenses for filing for those. Existing NBFCs and PSUs are also eligible to apply for a license. That's the big announcement, but it also mentions that only companies with 10 years of sound financial track record can apply. Furthermore, it says new banks' boards must have majority of independent directors, that sound credentials, integrity are a must for bank license applicants. So that stress on corporate governance is very much there. Latha Venkatesh now joins us with the analysis of the guidelines. Latha, this is what corporate India, companies like L&T Finance had been waiting for. And now that they've come, initial reactions saying that they look positive. What essentially is the reaction from industry?
Well, actually, industry reactions are at the moment muted because everyone is just trying to drink in these 19 pages of rules. But to begin with, yes, all resident Indians have permission to set up a bank. But the conditions are not just the financial soundness and integrity, but as well promoter groups whose business model is misaligned with the banking culture, by which they mean promoter groups with group companies that are of a speculative nature or that are subject to high asset price volatility will be excluded. Now, I would think this is a slightly roundabout way of saying that they will look askance at speculative businesses, broking and high asset quality volatility. That is real estate companies. So seem to have had their way, the Reserve Bank. The other important conditions put in so that promoters don't use the bank for their own group companies are very clear. The holding company shall have a minimum of 40% and shall stay put for 5 years with that 40%. Also, within that holding company, no one individual can hold more than 10% of that company, and at least 51% of that holding company should be by companies which are themselves publicly listed and have 51% of public holding. So there is an effort to see that one individual doesn't call the tune. As well, the way in which the holding company shall behave is regulated. It shall pay dividend only if it makes a profit, and the holding company shall set aside 25% of its profit for a reserve which shall be used for the bank. Its capital adequacy and the bank's capital adequacy shall be a minimum of 13%. Mind you, that's not the rule for current banks. As well, the holding company can raise loans only up to 1.25 times, which is what is the rule even for banks now. So very strict conditions even for the holding company. Within the holding company itself, promoters have to bring down, if they have more than 40%, they have to bring down their equity to 40% in 3 years, and to 20% in 10 years, to 15% in 12 years. Which is a bit of a disappointment. Companies like Kotak were hoping that they would keep 25% as minimum promoter holding so that they themselves don't have to bring down their equity much. So perhaps these shares would get a bit of a knock on Monday. As well, all promoters must list their banks within 3 years. That could be a tall order. FIIs and FDI, all NRIs put together can hold only 49%. Quite against the current status, existing banks can have 74%. I mean, ICICI and HDFC Bank do have that 74% of FII, FDI holding. These guys can have only 49%, but in 5 years, they can come back to 74%. No one foreign entity can have more than 5%, and no Indian entity other than the promoter can have more than 5% without RBI approval, and 10% at the maximum, not more than that. For the bank itself, 25% of the branches shall be in unbanked areas. So from the start, you make life a little difficult and a non-level playing field, considering that for existing banks, only 25% of new incremental branches will have to be in non-bank areas. And promoters cannot lend, banks cannot lend or hold equity or hold bonds of group companies. Promoters should also ensure that the holding company is fairly transparent in its own holding structure so that the RBI can supervise. Every time the promoter increases his own equity in the holding company, he if it is a big company with, over 40% of non-financial assets, they shall go to the Reserve Bank for approval when they increase their own equity. So, enough conditions to see that the holding companies toe the RBI line.
Right, Lata, as you put it, those were, of course, the guidelines that the RBI has released. And also, as you said, reaction from companies interested in banking licenses has been muted to positive as they read the fine print of the guidelines. And as we've been led to understand, boards of companies will be taking a decision on whether to apply for a banking license or not. But the current Financial Services Secretary, Rajiv Thakru, at his end, spoke exclusively to CNBC TV 18's Akanksha Sethi. And he said the government and the Reserve Bank are on the same page as far as the new norms are concerned. But he also reiterated that the new guidelines will ensure that wrong persons do not get a banking license. Let's listen in.
We personally think, and I think RBI and government both are fully on board, and we are fully on the same track in this. We think that the fit and proper criteria takes care of all possible eventualities, and it is sufficient safeguard, and prescribed procedures would ensure that the wrong kind of persons don't get in.
Right. And sir, you have a 500 crore minimum capital requirement. Is that enough or is that too less, as some people say?
No, I think it's a good starting point, because earlier I think the requirement was 300 crores. It's 500 crores now, and I think we'll have to see how that plays out.
You've also allowed PSUs to ask for banking licenses. Is there going to be a level playing field between PSUs and private sector companies, or do you think PSUs will end up having an edge?
No, nobody has an edge. It's the same guidelines that apply to everybody, and everybody will be evaluated with the same yardstick.
So that's, of course, the first thoughts coming in from the Financial Services Secretary post the release of the guidelines by the RBI. But Shireen has a power-packed panel with her to discuss the new bank license norms issued by the RBI and, of course, implications and how corporate India is likely to react. Let's cut across. Over to you, Shireen.
Well, a bunch of reactions are coming into the guidelines released by the Reserve Bank of India. Let me go across to my guest now, Sunil Godwani. Up until now, you said let the Reserve Bank release its guidelines and then we'll let you know whether we will be in the race, whether we will apply or not. On the basis of what you've heard this evening, are you going to apply?
Yes, we will. We are going to apply, and the guidelines have created a very level playing field, which is a very positive move from RBI. I think it clearly states that everybody is eligible, and they will decide who is not eligible, and they've kept a very broad arena. There's a lot of elbow room with them, and anybody who has an aspiration to be an ethical bank, to have a good set of financially strong promoters and comply with the financial inclusion other guidelines, and who has still got an experience of running a financial service business, because they do say you got to have a 10-year experience in there. So it's not, you got to have a background of financial services, sort of matured in the industry, seen the ups and downs of the market, be emotionally strong to handle it. Looks very positive.
But in terms of the operating holding company structure, are you in agreement with the fact that that is going to be feasible for people like you to be able to put together? And I know that in the run-up to your being able to apply for the bank license, you did try and ring-fence yourself already. So are you better placed than most people in that sense to be able to apply on the 1st of July?
We would like to think so, but I think we'll still have to evaluate it out, understand exactly what are the details in this, because the nomenclature has changed now. It's not a non-operative holding company, it's a non-operative financial holding company, and we like to see what does that impact. And if any further structuring is required, one will have to evaluate it out from the economics of the business, because it's just not being a bank. It has to be financially, economically viable at the end of the day to provide value to the shareholders.
But the fact that you are allowed 40% in the first 5 years and then you need to bring your stake down eventually to 15% over 12 years, do you believe that that is fair? Do you believe that that is going to be something that you will be able to comply with?
This point I think is very fair. I mean, they're clearly wanting to give a message out that the banks will not be promoter controlled. There'll be a governance structure in place, an majority independent board. The shareholding will be there. At the same time, you are the promoter. So you will be called upon to come in and provide capital for the bank in an adversity situation. So very clearly you're a designated promoter, but you don't have strong influence over the company, over the bank, as if you own it in a manner of sense. So I think it differentiates between ownership and management, which is positive.
Enough safeguards, Pramod Bhasin, to avoid the moral hazard in that sense?
Too many, I think.
Too many.
I think, tweaking all these shareholding arrangements and doing all of that, I don't think necessarily works. If you look around the history of this world.
But globally, that's exactly how it works.
Well, not really. In terms of, if you think of private banks that have worked quite well for years, if you think about ownership in banks that has worked quite well.
And then we saw 2008.
But who did it affect? All the ones who were really public. That's the point I'm making, is that being public, for instance, is no safeguard. So I think RBI, I actually think RBI is a remarkable institution which has done remarkably well for us over the years. So the broad outlines you can put in for a bank are terrific and have to be adhered to, and you must make sure you adhere to those. I think tweaking around with every piece is hard. For instance, the piece about 3 years going public. You're going to have to invest an awful lot of money in systems and technologies and branches and all of that. And you will not, and that will affect your profitability, frankly, in the first 3 years. So is that the ideal time you want to go public? I don't know. Perhaps if the idea is to give the public, access to those shares at a time when they haven't got too expensive, it may achieve that purpose. But I'm not sure that you can predict these things as well as it's laid out. Last one, I think always if someone is really interested in making the bank very successful, then asking them to dilute, can you imagine what level of interest they will have in doing that in year 10, 9, 10 and 11, just before they have to sell out? Obviously, it should be high because they will want to sell at a high valuation. But will you play for the long term? Will you play for the short term?
But as we were pointing out, existing banks will need to comply with the same promoter shareholding requirements, in fact, more stringent than what these guys will have to.
I agree, but I will also tell you that in those cases also, I think some of these tweaks are very detailed and micromanaging in some respects, whereas I think it should be left at a larger level.
Yeah.
I agree with Pramod on one point. The going public in 3 years is a challenge, but what it does, in fact, leaves an option open. If you want to raise capital, equity capital, you have an option open. It's rather than saying you cannot go public, so it's your call. If you do find that you're capable of doing that, you have an option to raise capital.
All right, I'll come back to you, Pramod, in just a second. Let me go across to Ashwin Parikh and Bobby Parikh, both joining us. Ashwin Parikh, let me start by asking you, the one big takeaway that we've been talking about on the channel for about a month, January 15th, if my memory serves me right, is when the Finance Ministry had sent its guidelines to the Reserve Bank of India and very clearly had said that do not bar realty or broking businesses from being eligible to apply for a bank license. And DK Mittal, you just heard him there saying don't keep anybody out ab initio. That was the Finance Ministry's argument. That seems to have worked with the Reserve Bank as well. Your thoughts on that?
Yes, actually, you can now see that it's really worked for the regulator very well. What he's really done is, I think he's captured the essence of that particular requirement. What was the essence? The essence was that if you are in speculative businesses, and if those businesses are likely to lose value on account of market volatility, then to that extent it's a huge issue with the deposit holders and therefore the regulator. So, what he's done is he's captured the essence. He may not have specified the sectors, but now what he could do is, he can create adequate evidence, in the last 1 decade, we are talking about 10 years of presence, and he can look at the evidence which says where the market cap has volatility, where the volatility has really impacted the market of different businesses of those who are applying. So the evidence is, clear, and therefore, the essence has been captured quite well, Shireen, if you ask me.
But Bobby Parikh, let me come to you, and the point that Sunil Godwani was making, that by giving this much elbow room, we're actually going to see perhaps a rush of applications, and then the process of elimination is going to be a complex one, and who knows what kind of discretion will come in there.
So yes, I think I suspect that there will be lots of applications, I wouldn't be very wrong if I was to say that there will be a bunch of people who will be probably disappointed at the end of the exercise. So so at one level it's good that it throws the whole process open for everyone to apply. But then it's fair. If a banking license is being given, the regulator will exercise judgment in terms of who's fit and proper to get it.
Okay. Bobby Parikh and Ashwin Parikh, let me get final comments from you. Bobby, let me start by asking you, from whatever we've seen so far, what would be perhaps the biggest challenge as far as potential applicants are concerned?
So I think few things. The applications have to be ready by have to be in by the 1st of July. So, and they need to have a business plan which the applicants need to sign off on and be held accountable for. So. A viable business, and it has to be viable, of course, but no deviations permitted, and Reserve Bank could draw adverse inferences, etc., etc. So lots of that work ought to have happened already if you have to meet the July 1 deadline. I think the details of how the shareholding structure on this holding company has to work is something which at least in the limited time that I had, I wasn't able to quite figure that out. But if I think there will be some, if the holding company has to have other group entities participate in it, then I think that for large complicated groups that might create some structuring issues in terms of how they put it together with many tax issues, potentially governance issues coming through. So and also the issue of whether if you have listed entities on top of this holding company and the bank itself has to be listed, which will be a subsidiary of the holding company, then the fact will be that you will have two entities at two levels which will be listed, which also has its own sets of challenges. So, those are some of my sort of immediate comments.
Ashwin, you want to add to the challenges that Bobby just talked about?
Yeah, well, there are actually several. I mean, if I were to look at the first and the foremost is, we're talking about a completely new customer segment. We're talking about inclusion over here. And therefore, I mean, the first is the customer segment is different. Therefore, the product segments, channels, everything will have to be different. The promoters will have to, in their applications, very clearly establish that they will have a very viable business of taking banking to those markets which have not been attended to by the public system or by the banking system as yet. So that's one challenge. The second important challenge is there are a lot of clarity required. One important segment of people from where the applications could have come in is the NBFCs. Now, what will happen to NBFC's assets? I mean, if I am into, let's say, priority sector lending, or if I am into vehicle lending, and I have a huge, let's say, NBFC presence in that, can I convert it into a bank on the first day? I don't think I can. So with this kind of guidelines, the clarity is not available. So when you get down to detail, I mean, at the principal level, the regulator has really done a remarkable job. But when you come down to looking at the detail from various people who have talked to me for their applications, I'm getting a sense that there are more questions than answers in the guidelines, I thought.
Absolutely. So the devil really is in the fine print. Unfortunately, we've completely run out of time. So Religare Bank, is that what it's going to be called?
We'll have to wait and see.
Okay, we'll have to wait and see.
So lots of applications expected, and Religare is going to be one of them. Shireen, thanks so much for that. So those, of course, some viewpoints coming in. Here are some more reactions from corporate India. And broadly, everyone seems to have welcomed the new guidelines that's been put out by the Reserve Bank.
I really welcome these guidelines. They really reflect a very deep and erudite thinking on part of the Reserve Bank of India, particularly not excluding ab initio some of the corporate houses with exposure in the real estate and brokerage sectors is a very, very welcome step indeed. And the guidelines on the whole are going to go a long way in promoting the cause of financial inclusion and overall deepening of the financial sector. So we really welcome it.
I hope that there is a level playing field. If there is a level playing field, then I do not think that one should worry about public sector, private sector, everybody coming into the play. Secondly, if there is a very restricted number of licenses if they are going to issue, then of course it will become something which will constrict the number of players who can come in. So that's where I hope that RBI will be liberal on that subject, and then thereafter it will be survival of the fittest.
So that's of course reactions coming into the RBI issuing the guidelines for new banking licenses, and that too crucially just a week ahead of the union budget. Well, that's the top story tonight. Meanwhile, the other big story we've been following on the channel, he recently signed up for the Gates Buffett charity initiative, and now Wipro chairman